This might be the most dangerous housing report Canada has published in years, and not because prices are crashing, but because nothing is happening.
Yeah, look, everyone is out there still arguing about affordability, but the real problem now is that the entire system is starting to stall.
Yeah, we're not just in a housing crisis anymore. We are now in a construction freeze, and CMHC is basically warning that if this continues, we're going to be short millions of homes again, even after everything that's already happened.
Welcome back to the Canadian Real Estate Investor Podcast.
My name is Daniel Foch.
I'm Nick Hill.
And today we're going to be breaking down two major CMHC reports, and we're going to have an interview with their chief economist. So we're going to go through the housing supply report and the housing market outlook very quickly and what they're quietly telling us about where this market is actually going.
And then joined, of course, by friend of the show, Mathieu Leberge. But we're going to cover supply, demand, construction prices, and why the next phase of this market might look very different from what people are hoping or expecting to happen.
So if you get value from this episode, all we ask is that you share it with someone who still thinks that this market is about interest rates alone, and maybe leave us a 5-star review. Anyway, let's just rip through the quick key takeaways that we're going to go through in this episode today. Number one, Canada still needs millions of homes to restore affordability. Construction is slowing very quickly. Developers are pulling back. Projects aren't penciling for rental or for sale anymore. Sales activity is near record lows in new construction. And despite all of that, population growth, even though it's negative this year, is still structurally high for any country. Like, our population is growing, and so we still will eventually need new homes.
Yeah, talk about a bit of a weird dynamic, right? Long-term shortage, short-term oversupply risk in certain segments, and of course, almost zero confidence from the builder, developer, and construction community.
Yeah, it's really not just a supply issue anymore. It's not even just a policy issue. At this point, it's like you've got so many factors that are making development risky for developers, and it becomes a confidence problem in the development pipeline. Like, why would I put all this capital? Why would I risk all this capital?
Yeah, exactly. Look, when a builder or developer loses confidence, supply doesn't just slow. It really just, as we've seen it in front of ourselves in real time, Dan, kind of just collapses.
Yeah. And this means that the homes that we aren't building this year or in next year, or these will show up as shortages as population growth gets back to its annual growth rate in 2028, 2029, 2030.
Something to look forward to, I guess. So let's start with the supply report. CMHC basically says, even with aggressive building, we're still not on track to restore affordability.
Yeah. And that's like, we already knew that. So, but what's changed as a result of this is the trajectory. So before, the story was, we're not building enough. And now the story is, we're building even less than we thought we would.
Crazy. And the simple fact of the matter is that's because projects don't pencil, AKA they don't work financially.
Exactly. Costs are too high. Land, construction, financing, development charges, which have now been cut in half in Ontario by the feds, $8 billion. I think they just basically bought down development charges. Taxes were there, GST, HST. So hopefully that'll give some life to it. But even with policy relief, the math is still pretty tight.
Yeah, the math really isn't mathing because buyers at the end of the day can't afford the product that these builders and developers are trying to produce.
And that's really the death loop there, is if buyers can't afford it, developers can't sell it to them, lenders won't finance it even on rental, projects don't start. Nobody's going out and doing this to lose money. And unfortunately, that's just not how it works. And you can't solve a housing shortage if no one can afford to build or buy the solution.
Yeah, well said. Look, one of the most important things in the Outlook report is the activity has really just fallen off a cliff.
Yeah, and this is where a lot of people get it wrong. And they think the biggest risk is prices dropping. But prices dropping actually makes things more affordable. So that's not the risk.
Yeah, the risk is really that transactions, the actual action in the market, is disappearing.
Yeah, because real estate is a flow business. Like, agents have always been cheering on like prices going up. It's like, do you know what you're cheering for? Because the more prices go up, the fewer people can afford to buy these things. Agents need transactions, developers need absorption, lenders need volume. This entire system depends on all of these and this is a huge portion, like 10% of Canada's GDP. If the activity dries up, the entire ecosystem freezes. And real estate doesn't break when prices fall. It breaks when nobody shows up to transact, as we've seen over the last couple of years.
Yeah, exactly. I mean, a quiet market, I don't think anyone's cheering for that, right? Okay, but what plays a huge role in all of this is policy. So let's talk about that, because governments, both on a provincial and federal level, seem to be reacting. It's pretty clear, the reaction, Dan. Tell me about what we've seen just in the last couple of weeks.
Yeah, I think this is where it gets really interesting, right? Like you've seen, and it become a question of like, is it too little, too late? Like we've been saying this, for what, 3 years? To the housing ministers on the podcast, like
yeah, quite literally, yeah.
You're seeing GST, HST rebates expanding, which is great. Like these are all great things. I'm not complaining. I just don't know if it's too late for them to be impactful because sentiment's already crushed. You see development charge reductions. We're seeing more incentives for purpose-built rentals. We're seeing tweaks to financing programs.
I mean, they are quite literally throwing everything at the wall, pulling all of the levers that, we've been saying again for years, right? How do you get the market back? And not just, how do we get prices ripping again? Well, there's certain levers that policymakers can pull. And we've seen them go and like literally crank every single one of those.
It's like a little kid in an excavator, just like, like a cartoon, like just pulling everything, this thing's spinning around. Hopefully a hole gets dug. I don't know. Let's see. Yeah. I mean, like the reality is that they have to. And I think the February jobs print, was it February where it was like 84,000? Is it Feb? Jan or Feb? Yeah. So I feel like that showed up. And then, I mean, you just saw construction GDP like print yesterday was really bad. They have to do this. They're doing it out of necessity. If construction slows too much, and I'd make the joke a lot because like a lot of my buddies are in the trades. Like most of my friends that I haven't met from like business or real estate are like my buddies I grew up with, like they're in the trades, right? So those are not the people I would want to be unemployed, like at scale, right? Like they got snowmobiles and guns and trucks and like, like heavy equipment. And like, they're like, if anybody's gonna have a revolution because they're upset, that's probably them. So if construction slows too much, you have that risk, which is obviously just like kind of a joke. It's like a fringe risk, but I don't know. I mean, the RCMP did put out a report saying that Canadians were going to revolt if they realized how broke they were. That happened.
Yeah, that was crazy. That was a real thing. That was a real thing. Yeah.
So if construction slows too much, you have that risk. You have GDP getting hit. You have employment getting hit. Tax revenue collapses. We have no money for infrastructure. There's so many knock-on effects in the economy, and you get this really broken infrastructure gap later when the economy is fixed, when we're coming out of a recession, we're trying to grow. And now all of a sudden, do you really want to be dealing with like this decimated housing landscape because no houses were built during that recession? So it's not really about housing anymore. It's about protecting the economy from a construction-led recession.
Yeah, exactly. And that kind of exacerbates the problem of another key theme in these reports, which is the mismatch. Okay, we're not just talking about short housing, we're short the right kind of housing.
Yeah, exactly. We're building small condos, but demand is shifting towards family-friendly housing, and they wonder why we're not having any kids. Well, maybe we build houses for people so they can, ground-oriented units, missing middle, even infill, even in urban environments. Do people want to live in 60-story condo towers, or do they want to live in little 4-6 unit buildings with a backyard and parking and whatever, right? In a nice neighborhood.
Are you saying that multiplexing is a good idea, Dan? Is that what I'm picking up
I am
here?
Multiflexing right now. I'm totally multiflexing.
Wow.
That's what we should call the event, man.
That's actually pretty damn
pretty
good.
Yeah.
Okay.
It's a good one.
Yeah, well, look, to your point, right, the small condos, that's what's being produced and has been historically produced at like a crazy level, not being absorbed because people don't want that. And that mismatch creates localized oversupply, but at the same time, an overall shortage. So these two things are happening at once, and that's where that big mismatch of supply and demand comes into play.
Yeah, and this is like geography as well. Like we're getting tons of rental supply built in some markets and none built in other markets. We're getting the right type of housing built in some markets and the wrong in the other markets. And this is why some markets feel super soft while others are still insanely tight. You can have too much housing of one type and not enough homes of the actual right type at the exact same time.
Which, as you said, is exactly what's happening. So let's do this. Let's look at what CMHC is kind of really saying without saying it. We'll take this upon ourselves to read between the lines a little bit, because CMHC is a government organization after all, and they have to be careful. And we're just two random guys that talk about real estate on the podcast. I will give them credit, to be honest with you.
Their economists are pretty like legit. Like they aren't that careful. Like they're diplomatic and polite.
Not as careful as they used to be.
They're good.
Yeah.
Like they're good. I like you can have a real conversation with them, which is very refreshing. Anyway, in the reports, they're saying, number one, we're not building up enough. Number two, we're about to build even less. Number three, policy is trying to catch up. Number four, the lag is already baked in. And so you can't fix it. How do we fix it after the lag?
Yeah, I mean, so essentially, even if things improve, we're still going to have that shortage later. We're still kicking that proverbial can down the road.
Exactly. Like housing cycles are slow. It's not like a small product that can be manufactured in 5 minutes on an assembly line. Is, you don't fix a 5-year supply gap in 12 months. The homes we didn't build yesterday are the crisis headlines of tomorrow. And if you actually want to talk through this stuff with people who are investing in real time, we host free monthly investor roundtables. Make sure you go check out realist.ca. That's where you can join that, attend all of our events, etc.
Yeah, it's great. And there are no fluff, no gurus, no BS, just real conversations with people that are actually doing deals and making things happen right now, even in the worst market of our lifetimes. Check that out, realist.ca, links in the show notes. Okay, so let's talk about some practical takeaways for our listeners today. Like, what can people actually do with this information?
Yeah, I wish I had better news, but for for buyers, and for, well, I guess for it's going to be, the volatility is going to continue. And this is kind of the headache of this market. It's I thought they were going to, fix it and give us a normal market, but don't expect a straight line market. You're going to see this volatility continue. Watch new construction closely. Opportunities come from low activity, not just falling prices. You want to take me through investors?
Yeah, I'd love to. So, look, for investors, it's really kind of a fork in the road here, right? You got to focus on some fundamentals here, which is rentability and cash flow if you have existing properties, exit flexibility for going into some kind of construction deal. You got to be very cautious about pre-con if absorption's weaken. You really have to model all of your numbers for things like falling rents, competition, super increased competition from other investors and other landlords, and of course, increasing vacancy. Anecdotally, Dan, I've got 2 units open right now, and it's always the same story. You get dozens, if not hundreds, of applications. And most of them aren't great. And then you kind of whittle it down to the few that do look pretty good. But that's even become harder now. We've had one of these properties listed, and it's a great property. It's a great unit. We've had one of them listed for over a month. And there is literally has not been one great candidate for this property so far. And this is something that you and I have been hearing a lot from people across the country. This is market agnostic at this point, where it's harder to fill empty units, and that's just going to have to be creatively. Am I lowering my price? Am I, incentivizing, utilities included, free internet, free month worth of rent, whatever that may be. We've said this before, right? It's the age of the operator. Time to really lean into that and live that as a real estate investor or developer.
Yeah. I think you can scale that across the same advice for sellers, right? You're saying, what matters more? Does it matter more to protect my price, or does the liquidity, actually getting the money, matter more? And we've felt like we were probably net sellers for the last couple of years. We wanted to be liquid. I'd rather get the money out of a deal and have it to be, so I had cash sitting on the sidelines for the market that we're in. Same thing is true for rents. Same thing is true for sellers. I think liquidity matters more than price, especially if you're creating a new unit, and you're not rent controlled. You should really be just trying to get that cash flow. And same thing if you're a developer and you're trying to liquidate a project, get that project out and into the market. You're competing for a very thin market here.
Yeah, I like that. Thin market is definitely the way to. I guess, a lot of, the more TV or sporting events I watch, I was just going to say, Wegovy, Ozempic, these guys are on every commercial. Well, I guess they've penetrated the market as well. And look, this is for everyone: buyers, sellers, investors, builders, developers. This is a timing and patience market, not a FOMO or momentum market, okay? Good investors don't predict the future. They prepare for multiple versions of it.
Yeah, and that, I guess that's our final take on sort of the reports here. But instead of just speculating and going through it from CMHC, we have a good relationship with CMHC. We really like them. I know Nick loves them because he sells their debt, or sells their insurance product on the debt, and they're a sponsor of our event. But like, we've always been big fans of what they're doing in the space. I think that like, it's been a meaningful. It's had a meaningful impact. I mean, we would have had no construction in the last couple of years if CMHC MLI Select didn't exist, right? Like realistically.
Yeah.
So,
crazy.
So we're fortunate enough to have that relationship with them. We talk to their economics team pretty regularly, and wanted to bring in somebody who actually worked on these reports and works with this data every single day. So
yeah, good friend of the show, and actually a gentleman that we were able to interview in person the first time we met him, Dane, at CMHC headquarters in Ottawa, which was a very cool experience. Apparently no civilians are really allowed in there, but you and I got the passes and they let us in, which was a very cool experience. Yeah, so look, coming up next, we're joined by Mathieu Leberge from CMHC. Super sharp guy. I always love hearing what Matt has to say and the reports and data that he puts out.
Yeah, and we're going to dig into what they are actually seeing on the ground, whether their supply targets are realistic, his thoughts on the GST, HST stuff, and what impact that's going to happen, and sort of what they think happens next.
Yeah, I mean, and probably most importantly, what they're worried about.
Yeah, so let's get into it.
Yeah, before we just get